Welcome to the Deep Dive. Today we're digging into a collection of recent articles, posts, basically the crypto market pulse as of today, June 12th, 2025. Our goal. Really just to cut through all the noise, find the key signals in these sources, and figure out what they're actually telling us.
And what's immediately striking looking through these is this real tension. You've got some reports talking up potentially massive rallies ahead, even whispering about alt season being right around the corner.
Right, the familiar hope.
But then you look at other sources covering today, right now, and they're describing a market downturn happening as we speak.
Okay, so yeah, that's the puzzle. Let's unpack the optimistic side first. Where is that coming from? One big thing highlighted is the idea of Fed rate cuts. The theory seems to be that, cheaper money might just light a fire under crypto.
Could fuel a big rally, yeah, and maybe set the stage for that alt season on the horizon people talk about.
So the macro view, lower rates making crypto more attractive.
Well, yeah. When traditional safe stuff like bonds or savings pays less, investors often start looking for better potential returns elsewhere. Even if it feels riskier, like crypto sometimes does. Money flows towards potential yield, doesn't it? Adjusted for risk, of course.
And this optimism isn't just general, it gets specific about Bitcoin too. We saw mentions of Glassnode data.
Ah, the on-chain analytics folks.
Yeah, and one source said it revealed key signals for an explosive surge. Sounds dramatic.
Right. On-chain data looks at what's actually happening on the blockchain, transactions, wallet movements. So when they talk about key signals, it's likely stuff the sources see as bullish, maybe people holding Bitcoin longer, less selling pressure.
Accumulation patterns, that sort of thing.
Exactly. Or maybe seeing coins move off exchanges into private storage. Historically, those kinds of things can sometimes come before big price increases. Suggests more long-term belief, less short-term trading.
Okay, and another bullish point mentioned. This was from a Juneteenth interview with Bitwise CIO Matt Higgin.
Oh, yeah, I saw that.
He was saying corporate Bitcoin adoption, like for company treasuries, is really just beginning.
And he linked it to traditional cash management strategies, just not cutting it anymore.
Which raises the question, why would a company put Bitcoin on its balance sheet? Isn't that usually just cash or super safe stuff?
Traditionally, yes. Very liquid, low risk. But think about inflation eating away at cash value. And yields on safe assets are still, well, pretty low. So just holding cash can feel like losing money slowly. If companies start seeing Bitcoin less as pure speculation and more like a potential store of value, maybe something that could appreciate over time.
A sort of digital gold for the corporate world.
Kind of, yeah. If that catches on, it opens up a massive new potential source of demand, a big shift from just holding cash or low-yield bonds.
Okay, so we've got these potential big-picture drivers, Fed actions, maybe corporations dipping their toes in. It naturally leads to that other question one source asked directly. Is altcoin season 2025 around the corner?
Absolutely, because it's not just about Bitcoin, is it? Altcoin season. That's when a whole bunch of other cryptos, the altcoins, don't just go up, but they actually start outperforming Bitcoin by a lot.
Right. And the sources mentioned a specific indicator for this, the altcoin season index.
Yeah, that index is highlighted. It basically tracks what percentage of the major altcoins have done better than Bitcoin over the last 90 days.
So it's a way to measure if the momentum is spreading out beyond just Bitcoin.
Exactly. It gives you a number, a threshold, helps answer, is this rally just Bitcoin, or is money really flowing into the wider altcoin market? If that index climbs high enough, it suggests, broader participation, sentiment shifting towards alts relative to Bitcoin. It measures market breadth, really.
Okay, so interesting signals there. Potential future upside, hints of alt season. But how does all that optimism square with what the sources say is happening literally today, June 12th?
Yeah, and that's the disconnect. The immediate reality, according to these reports, is, well, a pretty broad downturn across the whole crypto market today. It wasn't just one or two things. They describe it as widespread weakness.
And there were specific numbers mentioned, weren't there?
There were. Total market cap apparently fell about 1.68% today, dropped down to $3.39 trillion.
Okay, noticeable.
And daily trading volume also dipped, down over 5%, 5.27% to $133.81 billion. So less money overall and less activity today.
And did the sources point to a trigger for this? What caused the panic, as one put it?
They did. They explicitly linked it to weakness in traditional markets, mentioned the DJT, the S&P 500, the NASDAQ, all sliding today, and crypto just sort of followed them down.
So that correlation is still strong then. Crypto gets dragged down when traditional risk assets dip.
It definitely seems to be a factor in these short-term moves, yeah. Shows that even with its own unique stuff going on, crypto is still sensitive to that broader investor mood, especially what happens with tech stocks.
But here's where it gets kind of layered, isn't it? Because even with this overall market dip today, the sources also show specific projects are still moving forward. Like activity hasn't just stopped dead.
Exactly right. The tide might be going out overall today, but some individual boats are still sailing, you could say. Like Blockdag got mentioned, apparently reported a huge raise, $298 million.
Wow, yeah. And one source was comparing it to past performance of coins like XLM and AVX, positioning Blockdag as a top pick.
Yeah.
They even cited a specific price, 0.00118, and talked about a potential, what was it, 2,678% ROI from their perspective, of course.
Big numbers being thrown around there shows there's still project-specific hype and funding happening. And another example was Hello Labs. They announced some major upgrades to their Hello Tokens economy.
Right, like a burn and earn model, trying to make it deflationary.
Yeah, reducing supply over time, theoretically. And also a multi-chain bridge, letting the token work across different blockchains to boost its usefulness.
So people are still building, still trying to improve the fundamentals of their specific tokens, even when the broader market's having a rough day.
That's the takeaway. Project-level stuff keeps happening. Development, investment, trying to add real utility or better tokenomics that can sometimes push against the general market trend, or at least exist alongside it.
So this really is the core puzzle from these sources, isn't it? You've got these potentially huge future rallies hinted at, driven by macro stuff like the Fed or big trends like corporate adoption. You've got indicators maybe pointing to alt season.
The optimistic longer-term view.
But then today, the market's down, and it looks like it's reacting to jitters in the traditional stock market. How do we even start to, make sense of these conflicting signals all at once?
I think it just highlights that crypto operates on, well, multiple levels simultaneously, different timescales, different influences. What the sources are really showing us are these different layers, right? There's the long-term potential maybe driven by economics, by how big players allocate assets. Then there's the micro-level specific projects building cool things or changing their token rules. And then there's the immediate short-term reaction, how crypto bounces around based on wider market fear or greed, often linked to stocks.
So it's not just one simple story. It's like several narratives playing out at the same time.
Precisely. You can see the logic behind potential future growth based on some factors.
While also acknowledging that right now, volatility is high, and it's connected to what the S&P 500 is doing.
Exactly. And navigating this means trying to understand which signal matters for which time frame. Are you thinking about the next few years or the next 24 hours? The sources tell us you need to look at everything, the global economy, the specific tech being built, and keep an eye on traditional markets because that link is clearly still there.
Okay, so we've kind of unpacked those potential upsides, Fed cuts, corporate interests, the altcoin index. Yeah. We've seen the reality of today's slide and its link to traditional markets. And we've noted that project-specific stuff like Blockdag's raise or Hello's upgrades keeps bubbling under the surface. It's definitely complex.
It really is. No single simple answer jumps out, does it?
No. So maybe here's a thought to leave everyone with as they digest all this. Given these very different signals, these long-term potential drivers versus the immediate market reacting to outside forces, how much weight should today's price action really carry when you're trying to form a longer-term view based on those underlying trends and developments the sources point to? Something to think about as you continue your own deep dive.